The positive thing on the first half was that sales of apartments developed well. We sold more than 1,000 new apartments and additionally made a contract to construct and sell 542 apartments to an institutional investor. We received significant orders for schools and business premises, and order backlog went up. The very big disappointment was that problems in completion renovation projects and Swedish operations continued. Despite our corrective actions, we could not stay within the updated cost estimates, and the project completion dates have been delayed. The weak results for the period are also explained by some clearly loss-making projects in social care and educational premises service area, and the relatively low net sales in the business premises service area. A common factor in poor performing projects is insufficient preparation before the start of the project. During the past year, we have taken various corrective actions to develop the design and processes and project management. The outlook for the net sales is weakened by delays in the startup of business premises projects. The major reason behind the weaker outlook for the operating profit is significantly higher than expected losses on complete renovation projects. The outlook for operating profit is also weakened by single loss-making projects in social care and educational premises and business premises service areas, and slight decline in the selling prices of apartments. The first half result is burdened by losses of about 15 million euros from complete renovation operations and losses of around 6 million euros from operations in Sweden. Demand for business premises was low in the beginning of the review period, but demand picked up towards the end of the period. Demand for large logistics and commercial buildings declined, but there was a greater demand for office and hotel projects. The number of projects was on the same level as year before, but the average size of the project was smaller than last year. The decline in net sales and single loss-making projects weakened the profitability of the unit. A total of 13 projects were completed during the review period, and at the end of the period there were 20 projects under construction. Today, complete renovation business is operated under business premises service area, and we have 4 heavy loss-making complete renovation projects that have a significant impact on the result for the review period. The total value of these 4 projects is around 69 million euros, and they are strongly financially negative. The losses of the complete renovation operations are also increased by supplementary work on previously completed projects. There have been significant inaccuracies in the forecasting the cost to complete renovation projects. It is possible that complete renovation operations will generate further losses in the future, and we have taken this into account in this year's outlook. Demand for housing remained at a good level during the review period, although the sales times have become longer. There were more apartments for sales on the market, which has led to tighter competition and price pressure in high demand areas that are, for example, smaller university cities. Net sales growth was generated by the increase in housing production and sales in all major areas. Raw material and subcontracting costs have risen slightly since last year, due to which the average margin of housing projects saw a slight decline from previous year. In the beginning of June, Juha Höyhtyä was appointed as the new Executive Vice President for the service area and as a member of the group's executive board. Juha has a long experience in construction business, and he has served altogether 24 years in construction company Lemminkäinen in Finland as well as abroad. And previously Juha has acted as CEO of Teline Kataja. In March, we launched the Deco wooden high-rise apartment building concept, which makes it possible to build a 4-story wooden building as a room element solution. The concept provides good support for the company's strategy as it is strongly based on industrial manufacturing. The product development was largely also driven by demand for ecological and domestic products. At the turn of the year, Lehto launched its Lehto Total Service Package, which combines complementary construction and pipeline renovations for housing companies. A housing company can sell the building rights to finance its pipeline renovation. This new service has attracted interest in the market during the first half, and Lehto is currently examining dozens of sites. However, these projects will take some time to be implemented, but first contracts are now being done. The housing service area has taken over the well-organized and profitable pipeline renovation unit previously carried out by now discontinued building renovation service area. Demand for pipeline renovation remained good, with 4 pipeline renovation projects completed during the review period and 10 under construction at the end of period. Net sales for the period was 33 million, and it was quite evenly split between care home and school and daycare centers. There was a decline in care home construction during the review period. Care home projects are being postponed, most probably due to operational challenges faced by healthcare operators. But regardless of the current weak demand in the care home market, we estimate that the business will continue to be attractive in the future, and we are further developing scalable concepts for all customer segments in this service area. Demand for school projects remained at a good level, and there is an immediate need in the market for both temporary premises and permanent schools. We have put a strong emphasis to improve preparation phase of the project as well as on project management. Operations are now more clearly targeted on developing Lehto's own product concepts and more efficient use of company's own manufacturing. These measures are expected to gradually improve the project profitability in the service area. Lehto's Swedish subsidiary has been up and running just for 2 years. The unit is currently carrying out a daycare center project in which 3 modular daycare centers will be built in the municipality of Botkyrka, close to Stockholm. There have been significant problems in coordinating factory production and on-site work phases and fulfilling the requirements of the customer, and as a result, the project will post a loss. Swedish operations had a negative impact of 5.9 million euros on the group's operating profit on the first half. We think that Swedish operations are still in the startup phase, and we are now in the process of evaluating our business direction and our ability to utilize our competitive advantages in the market with the new country management. Factory production lies at the core of Lehto's business. Lehto manufactures a variety of building modules and elements at its own production facilities for its own use. During the review period, our factory capacity was found to be too high in relation to its short-term need for factory products. The need for factory products has been declined due to delays in the startup of care home projects and developer contracting housing projects, and a year-on-year reduction of business premises projects requiring large roof elements. In May, we announced that we would start an adjustment at the Hartola and Oulainen factories. The aim was to balance capacity with short-term demand. The most significant change in the balance sheet was the increase in inventories, which is mainly due to increase in the developer contracted housing portfolio. A large part of the housing business is self-developed, which in IFRS accounting is recognized as revenue and as a profit at time of completion. During the construction, its accumulated costs increase inventories, and at the time of completion, inventories are written off. This increased inventory has been mainly financed by debt. Our financial liabilities have increased by approximately 60 million euros during the period. At the end of June, our cash reserves amounted to approximately 23 million, and on top of that we had 34 million undrawn credit facilities. One of our key financial elements is so-called RCF credit limit, amounting to 75 million euros. This limit is subject to usual covenants related to profitability and indebtedness. The original covenant terms of the limit have been renegotiated during the review period, and as a result, the utilization of the entire limit has been somewhat limited. We have ongoing discussions with banks about our liquidity issues and financial solutions. The challenges of today are the result of decisions made during a period of rapid growth, some of which have turned out to be wrong. We have areas to improvement that we are well aware of. However, most of our business is healthy and profitable. We have about 90 ongoing projects, whereof about 10% are loss-making during this financial year. Projects based on our strategic competitive advantages are also financially healthy, and we will focus on these in the future. The second half of the year looks positive, as problematic projects have been completed or will be completed by the end of September, and a significant proportion of the housing stock under construction will be completed and recognized in the fourth quarter. Lehto's profitable business is based on our strategic competitive advantages that are design management, standardized solutions, and industrial manufacturing. That is why we continue to believe in the strategy of economically driven construction, even though we are now feeling some pain. Lehto wants to be an innovator in construction. We want to renew and change the construction industry because in the end of the day, society needs a new way of building. However, we are still on the way to achieving this goal. We have already shown that we have created affordable construction, moved construction work from work sites to factories, increased the share of standardized solutions, and brought innovative solutions to the industry. We are currently experiencing growth pain and even the pain of renewal, but we believe in our strategy of economically driven construction. The construction sector has not renewed or increased its productivity for over 40 years. Renewal is challenging, but working towards this goal is definitely worthwhile.